Hey, my name's Dave Nicholson and welcome to my YouTube channel. Really good news on interest rates, mortgage rates to be more precise. And that's the fact that 5 out of the big 6 lenders have cut interest rates to below 4%. I've got 3 new updates on those lenders that are joining that under 4% club. And we'll also talk about who hasn't yet cut. And is there an expectation that they will cut to be under 4% like everybody else? Now, if you're new around here, do make sure you subscribe to the channel over there and hit that bell notification. We've got new property content every single day. We talk about house prices, we talk about interest rates, we talk about investing in property and much, much more. And let's get some views on this video by smashing like, tickling like, doing something to that like button. That massively helps with the YouTube algorithm and helps get the channel more views. So I appreciate everyone that does that. And then share the video so you can WhatsApp it, email it, or Facebook message it to someone that needs to know what's going on in the market. So let's talk about these big 6 lenders. Now, there's one noticeably absent from this, and that's HSBC. They haven't joined the sub 4% club for some reason. Now, they could be waiting to just get the publicity around this outside of everybody else doing it at the same time. So they might do it by the end of the week or next week. Now, it's pretty much a foregone conclusion that the Bank of England is going to cut rates in May. That's looking nailed on, which is really, really positive. And that's something that this is taken into account. Now, these lenders are cutting rates for a few reasons. One is the swap rate. The rate that they borrow at dropped over the last month or so. That allowed them to get rates down a little bit. The other is that the stamp duty increase has really caused a slowdown in the market. And that means that they're looking to stimulate the market to be competitive, to get more deals moving their way. And a lot of them are expecting the Bank of England to cut rates on the 8th of May. So they just want to get ahead of everybody else. And that's a smart thing to do as well. So who has cut rates this week? Well, first off is Halifax. And Halifax is part of Lloyd's. Correct me if I'm wrong on that one. I'm pretty certain Halifax is part of Lloyd's group. And so Halifax have been a bit absent from this. But a lot of you have been asking, are Halifax cutting rates? Well, they have. And they are cutting rates by 0.19% on the whole. These rates are going to be live by today. You might not see them instantly on the comparison sites because they might not get that data uploaded. So as with all of these rates, I always recommend that you go through a broker. A broker can get rates that often aren't on the comparison sites, and they do all the legwork, all the negotiation and getting those deals over the line for you. So I always think it's better to use a broker rather than going direct, but it's up to you. You can have a look at the direct route as well. But this is the Halifax rate that they're looking at. So they're looking at their best deal is on a 2-year deal. And they're dropping their rate down to 3.94%. So that's good. That's significantly under. I think that matches the Yorkshire Building Society rate that we saw the other day. Actually, no, that was 3.91. But it's close enough. And if you're with Halifax, it's really a lot easier to move across onto a rate with a lender you're already with. What else have we got to consider here? They will lend you 60% loan to value. So you're going to need 40% deposit or 40% equity. Now, some people will say that doesn't include me, and you're right, but it is the majority of the market. It's more than 70% of the market that would be able to take this kind of deal, which is really quite good news. It's not going to be great for first-time buyers. It's not going to be great necessarily for buy-to-let people either. This isn't that kind of product. This is for residential people. The fees on this aren't too bad as well. The fees are £999. Now, I know we used to get cash back. I know we used to have all of that wonderful stuff. In fact, I'm going to be doing a video tomorrow on a mortgage that has £750 cash back. So that's a reason to subscribe to get that detail as soon as it's out. Who else has cut rates? NatWest have also cut rates this week as well, which is good. And NatWest have been pretty competitive over the last 6 months. They're looking to grow their mortgage book and they want to get more business in the UK. So they are being more competitive. They haven't given all the details on this in their press release. So you will need to find some of this out yourself. But they have got a 2-year deal on here. They're dropping the rate and matching Halifax at 3.94%. And the fees are a little bit higher, 1,495. Haven't given us details on the loan to value in the press release on that. So once this goes live on their site in the next 48 hours, do go and have a look on that, and maybe you can comment below with what the loan to value is and help anyone that's watching this on the channel. Now, these fees are higher than Halifax. So if you had a choice, you'd probably go with Halifax if you were doing a new mortgage and you weren't with either of those lenders. However, if you were already with NatWest, I'd consider transferring onto that, even with the higher fees, because if you start a new mortgage with Halifax, you're going to have solicitors costs and all of that kind of stuff. And it's a slower process, right? So that's a good option there. Who else has cut? Last lender that's cut that I've got to talk about today is Nationwide Building Society. And so Nationwide, they have various brands. They've got Virgin, which cut last week, Virgin Money, and they've got the Mortgage Works, which also cut last week as well. So they are getting back into being ultra competitive. And about 3 or 4 months ago, they were featured multiple of their brands being the cheapest deals for residential and for buy-to-let as well. So it's good to see that they're getting more competitive. Now, their rate is actually better than these two here. In fact, it's the best rate on the market at the moment, and that is at 3.89%. That's launching this week. It's a 2-year deal, and the fees on that are 1,499. So that's giving them that edge and getting them the market leading rate at the moment is with the Nationwide. So that's really, really, really positive to see. Now, what do we expect going forward? Well, we're looking at 8th of May, the Bank of England meeting. We've still got uncertainty around tariffs, about what the Federal Reserve will do, but it's pretty much nailed on now that the Bank of England are going to cut on the 8th of May. So that's positive news going forward for a lot of people. Are these going to cut again after that? No one knows for certain what will happen there. But what we do know is they are looking to get more business and be more competitive. So that is an absolute win. Now, other lenders will likely follow. I think you'll see other lenders that will get closer to these rates. Maybe some of them will try and be cheaper as well. And that's what we want to see all round. So all in all, very, very good. Now, if you have a mortgage that is looking to refinance in the next 6 months, I would start going to your broker now, getting your deal agreed in principle, because you can do that 6 months out. Then you know what your worst case scenario is. So let's just say you've got a deal that ends in 6 months from now. You go to Nationwide with a broker and you agree this deal in principle at 3.89%. Now, in that period of time, that 6 months window when you're still with your old lender or still with Nationwide or whoever you're with then, you've got that as your worst case scenario. Now, if interest rates go up at any point, you've locked in that better rate. If they go down at that point with that lender, you can go to that lender and ask to swap onto that newer, better rate before you start the deal. 9 times out of 10, they will do that. Obviously, check with your broker that the lender that you go with will allow you to do that. But that is a smart way to make sure you get the worst case scenario locked in, and you could only get a better rate. So that's very good as well. Now, if you didn't do already, do make sure you click in the description as well. Until the end of this week, we've got the fundamentals of property investing, where we'll teach you how to source property, how to pick the right strategy, how to refurb a property, how to get maximum cash flow via HMO, serviced accommodation, or various other routes, how to do the BRRR strategy as well. That's on flash sale at the moment for just £20, which is bonkers. Do click in the description and grab that. It's that price until the end of this week. Do smash that like button. Do check out all the other content as well on the channel, including this video right here.